Hello, good morning. Today is, wow, it's already May 14th. Man, this month is really flying by. I haven't done a live video in a while, so I think I'll just put one together right quick while the house is quiet and tell you what's going on in oil. Really caught a nice move yesterday, made about 600 bucks. And I'm just going to start with the daily chart. You had to start with the big picture chart. And I know there's a lot going on here, but the main thing we focus on the daily. Okay, every bar is one day. Every bar is one day. The main thing we focus on the daily chart is what are you doing? You're making lower lows. So every time the market prints a 20-day low, makes a 20-day low, it prints this red bar. Okay, so we're done with this cycle of higher highs, and now we're in a cycle of lower lows. Okay, we try not to be too complicated. I know it looks complicated, but it ain't complicated. The volatility has gone up. You see this? See this line here? That's the volatility right here. That's the average true range. We went from um, one basically up here when we were at the end of this uptrend, and now volatility has picked up, so we're moving at 1.69. So the average true range is 1.69. That's a very important misunderstood number, and I hope you guys are really getting around this stuff. I'd like to hear more from people watching this video. You know, if you have any criticism, I want to hear it. If you have any comments, I want to hear it. If you have any questions, please ask those questions, because I'm just not hearing anything from anybody. I don't even know if you're watching these things. But I need to hear that, because I'm trying to teach this to people. I think everybody on the planet should know how to trade. Everybody. It should be like um, you know, watching sports. That's why I make a lot of sports analogies, because it should be just like that. All right, so we're making lower lows. Now, the market only does two things. It's only doing two things. Really, only two things. It's making retracements and extensions. Retracement and extension. So it'll make a lower low off of an extension, right? And then it pulls back, and then it makes a lower low off an extension. Then it makes a retracement. Somewhere in here, there's probably 3 or 4 retracements that are made, and then bang, they make another lower low. So we're now probably in a retracement, because yesterday was a huge move. I'm gonna show you that, and we're going to a certain point, and then we're gonna make another lower low. You know, we're anticipating that this cycle is going to continue, right? That's the main thing. Now, everything we're doing up on the upper chart is risk management. How do we get into the energy of the market? And the energy of the market is making lower lows. This is to all this spaghetti up here is telling us, you know, when is the best time to get in, where to put your stop loss, etc., etc., etc. So let me just clean this up a little bit, put this on pause. So what I want to bring your attention to, and I know it's a lot going on today, but this is what I want to bring your attention to. We're going to blow up the chart. This bar right here, this red bar, was yesterday's range. Okay, so we started the market went way up here, and close down here, okay, for a lower low. You see, we made a lower low. This range is going, most likely, it's going to act as resistance. Okay, so the market, what it's going to do, most likely, does this all the time, is pull back into this range somewhere. Okay, we don't know where, we have an idea where, but it'll pull back into this range somewhere, hit resistance, and then continue to make a lower low. Okay, that's what it's most likely gonna do. And everything else really is just the science and art of getting into that movement. Okay, so remember that this range is this candle's range. This range is this candle's range. We're gonna go down to a lower time frame chart, and I'm gonna show you what happened yesterday. Okay, here we are on the 1 hour chart. Here we are on the 1 hour chart. Let me just take off a little bit of the noise here. Okay, so yesterday this was yesterday. This is today. Okay, so yesterday was a huge move. We moved from the previous low. This is the previous low, this yellow line. We moved up prior to the New York Open. New York Open happens at 9. Time is important. We moved up $2. That's a big move. The average true range is 1.6, so that's consistent. All right. We move up $2. 1.5 is the average true range. This is $2. Then New York session opened at 9, and we sold off. Let's measure that. So we sold off $2.69. Huge move. Huge move. $2.69. That's average. That's over the average true range. See, that's why when you're in downtrends, you can do much better. You can do really good, because the sell-offs are harder and faster. Now, see, we've moved to 69. So guess what's going to happen? Here's the previous low. They put in the previous low, and we know that that there's this oscillating motion. So when you get too far distended, the market wants to come back into the middle. It's like a rubber band. When you get too far extended to one side, it wants to come back in. Okay, and that's what you're seeing now. See that? That's a huge, aggressive, bullish candle right around 6, right before the open. You see this a lot. You'll see this a lot. So what we want to do, all right, what we're waiting for is a really good level we can get in on. Okay, like, remember, the average true range is 1.6. We're coming off the previous low right here. So if you can kind of guesstimate where the market is going to retrace to. So it's going to probably pull back somewhere in here, 1.5, 1.3, 1.5, 1.68. That's a common pullback number. You see these numbers a lot, 1.20, okay, somewhere in there. This is the 200 period moving average right here. So it might hit that, okay, and we might, because we're on the screen right now, we can just wait to see what happens hour by hour. We just check in. We know what's happening. We're in a retracement mode, And we're waiting to see a candle like this right here. So when you see a big, let's say if this thing pulls back, 1.7, and then all of a sudden you see a big red engulfing candle. You see a big red engulfing candle, and that's when you would think about going short. That's when you would think about going short. Now, sorry about that. I didn't mean to do that. And then once you're in that trade, you had to put your stop loss above the range, that daily bar that we looked at the beginning. Okay, that daily range is right, this is the daily chart right here, from here to here, where we made the new low. The bears don't want to give that up. They don't want to give that up. It's like a tug of war going on. When they make an achievement, they don't want to lose that momentum or that range. So when we get our pullback into this range, our stop is going to go here. Now I like to keep the stop out here because I don't, I'm looking at it, I'm checking in. I don't want to be right up here because market could come all the way up here, do 100% pullback, and take me out for a loss. I've seen that happen before. So let's go to the 1 hour and just review. So yesterday we had a big down move to the downside, $2.69 move. That's a big move, and made a new low, closed the new low at the end of the day. Now we're pulling back into that day's range, into the prior day's range somewhere. Most people, most traders that I've seen, they they'll have it preset, so they'll do like a 50% retracement. How do you do that? You go here, you grab your retracement tool, okay, and you're measuring this range from top to bottom. Okay, so the 50% number, the 50% of this range is this right here, this yellow line. So that would be 62.03, and we'll be watching that. So I'm just gonna put a line there. We're gonna watch to see what happens at that line. When it hits that number, what's gonna happen? Okay, so when it hits this, I'm gonna wait to see what the market does. Is it gonna react there and form a bar, a bear candle? I might even have to go to a lower time frame, say half-hour time frame, just to see a little more resolution. And if I see a good reaction there, then I'm going to put my stop loss above the previous day's range and try to get the lower low, right? So if I see a bear candle, my stop is up here, $1.34 away, and I'm trying to get out here. I could make $1.26. So if it hits S1, you can make 214, almost a 2-to-1 right there. Okay. So my teacher used to tell me that everyone is looking for a holy grail, and I'll leave you on this. Everyone is looking for a holy grail, but the only holy grail is measurement. So measure the moves and you'll start to see it. yourself. And I really want to hear from the group members, okay? What are you guys thinking out there? All right, take care.